Well, welcome everyone to the Future Work Scotland. Thank you for joining us for our February event. Delighted to be with you. For those of you who don't know me, I'm Sathpal Singh, of course, Sath. I'm your host. I'm joined by my co-host and co-organiser, Donald Henderson. A few familiar faces, so welcome to everyone. If this is your first time with us, welcome to you. This is a great session we've got lined up for you. Just the usual formalities, and we have a very simple code of conduct. We simply ask that you're respectful to one another and everyone to have a fantastic experience. And this is quite it's going to be a great interactive kind of session. There's quite a lot to cover, so I'm not gonna drag the intros out today. We've got tons of stuff to pack into it. There will be opportunities for questions along the way. We should have some time at the end for some Q&A as well, and we'll just give you a little bit of a taster of what's coming up. We've got a bunch of events now appearing in our programme. I'm thrilled to welcome Anna and Alistair for this event. Not met Alistair before really, but great to meet him. And I'm looking forward to hosting him. Anna and I have met before. We were on a panel once together. We met in Agile 2023 when she came over to Edinburgh last year. It was wonderful to see her in person. They're both very experienced Agilists, do a lot of consultancy, extensive experience, and I think it's going to be fascinating to hear how they came together to help us, understand where the opportunities are for greater collaboration between the worlds of Agile and finance, and most of us have found ourselves in that space. So without further ado, I'm thrilled to welcome them here and looking forward to hearing what they've got to share. Over to yourselves. Welcome.
Perfect. Thank you very, very much.
Thank you.
Anna,
Thank you for the intro. Yes, Alistair, go ahead.
No, you start. You start.
Oh, yeah.
Always.
I start. Always, okay. So yeah, maybe we just decided that we will just go directly to our plan, to the thing that we want to introduce to you today. And basically, we have a mural link. I think I posted it in the chat, but just let me know if you don't see it. I can repost it again so that you grab the link, you go to the mural. Yeah, okay, Sat, thank you. Yes, thank you. So yeah, just go there. Everything is there, the whole material for today's session. And I will be sharing my screen. And let's just go. Let's just jumpstart. Yeah, Alistair, if you want to add something before we
I was just going to answer the question that Sath brought up, which was how did we get started with all this? So by background, I'm a chartered accountant. I worked as an accountant for very many years, and then I sort of stumbled across Agile really back in around 2017, I think it was. And all my career as an accountant, as a finance person, I was always hankering after a different way of doing things, and I was sort of trying different things. But there are some very clear sort of rules and structures around how we do accountancy. We're going to touch a little bit on this as we go through. So when I came across Agile and the fact that there was a name for this way of working, that I kind of thought it was only me, and that there were sort of ways of actually interacting with things, I just jumped in with both feet and really got stuck into understanding Agile, agility, and all of that. And then just recently, I started to move back to the finance side and say, well, for most of the teams for which I've been a product owner, for most of the organizations that I've been consulting with, so often one of the challenges they have is dealing with the budgets, dealing with the financial folk in the finance departments and so on. And so I started to think about, can we figure out a way to help bring these two together? And would it be beneficial if we could do that? Because I can be a little bit schizophrenic in this, and I can be, and you'll find this as we go through, I can be very much the accountant, and I can be very much the agilist, and it's interesting trying to find the bits in between. And so and that's what Anna and I have been doing now for about a year, probably just under a year. We've been having sort of regular conversations, and we've been sort of pulling together ideas. And this is the culmination of that as to how we can actually help both sides of this divide that we see in front of us, both sides of that to actually come together for the benefit of everybody. And I'm assuming that we're talking mostly to Agilists today. If there's anybody there who's also an accountant, if you're willing to make yourself known, that would be good. But we're just going to have a conversation around what are these finance folk thinking whilst as they're preparing budgets, dealing with things, and then asking questions of the Agile teams. Does that sound like a plan? Does that sound something that people will get a lot out of? Yeah, cool. Right.
Yeah.
Thanks. Yeah. That was it.
That was it. Yeah. Then short intro. I'm Anna. I've been an Agile practitioner since 2010, and basically since 2016, I went into consultancy and have worked with more than 50 companies. Different things: Agile adoption, Scrum adoption, Agile transformations. So yeah, as Alistair mentioned, we started working on this topic like, maybe it was like September, I think, or yeah, something like that, August, September. And by the way, Alistair, I'm really happy that you got back into this topic, because like we have identified a lot of interesting areas there. And also me as an Agilist, there were a lot of things regarding the accountants and the financial accounting and their involvement into what we do crucial. And so we started delving into this topic, and we are going to share some of our insights, at least what we managed to cover during the time that is allocated to us. So yeah, feel free to ask questions if you are like me, passionate about this one and curious about what's to come. Okay, so let's just start. We really want to start with kind of let's just start with a couple of questions. Okay, so the basic question here, like that, is going to be there along the slides and the topic that we are discussing here is would it be better if financial accounting teams and Agile teams collaborated? And let's just take a couple of minutes to answer those two questions. What would be the benefits for you if those two teams collaborated? And what would you like to understand? Yeah, can we do that? Just grab a sticky note and let's see your thoughts on this. Maybe I can just put a timer, just so that we are kind of focused, and a couple of minutes, like 2 minutes. Yeah.
Just creating some post-its here, so just grab one and do what you want with it.
Yeah. So what would be the benefits if the answer to the first question is yes? And what would you like to understand?
Brilliant.
Yeah, the ideas are coming in. Whoa. Okay, I love this.
The benefit of better budget management, is that by the Agile team or generally, or could you put a little bit more context on that one?
That's me, generally. I think this is what you're covering. I think when people want to know what they're getting for their money, and then they can see the outputs, and they can make better decisions around, you know, how budget's going to be allocated. Really, it's kind of what I mean.
Sure, perfect.
Oh, maybe we need more time since people are still writing. Yeah, or now?
I think we're probably, yeah.
Yeah, we're good. Okay, very good.
So I think for me, one of the things, there's a statement there which says value is where stories and numbers meet, and I think that it's an interesting phrase, and I think I'm really sort of getting more enamored with it. I heard it in January, and I think what we mean by this is, if all we have is the numbers, if all an accountant can do is take what's happened in the past and try and create a budget for the future without any further information, the business is going to pretty much flatline, because we don't have anything that will allow us to say that we would have more than a 1, 2, 3, 4% variance on the numbers that have gone on in the past. And I think the thing with that then is that we miss opportunities if it's all about the numbers. If it's all about the stories, on the other hand, and we don't sort of actually sit down and put numbers around the stories so that we understand the impact of these, of these ideas that we have, the things that we want to try, the things that we want to explore. If we don't put the numbers around that, then we may end up sort of sinking a lot of cash into something that doesn't see a future benefit, or we may not invest enough in something because we don't know, because we don't understand it, maybe. And I think that if we only have stories, then we miss risks and we miss threats, when I think. But if we then work together, we then create the best value, or the greatest value, because the decisions then get improved and get refined. So the numbers get refined by the stories, and the stories get refined by the numbers. And if we were to work together and collaborate in this way, we would then have, I think, more value.
Yeah, definitely. And actually, this is great, since all of the answers that the community gave us here, like all of their ideas that they have shared, is basically what we are kind of also looking into. And this is great to see those ideas, that they are actually matching with our initial curiosity. And so we came up with these two kind of types of benefits for the Agilists and for the accountants for this collaboration. Okay, because like there can be a question, okay, why do we need to collaborate? We had a session, like I think it was in Agnostic Agile, that one person said, okay, I really did not know that we have to collaborate, right? So yeah, honestly. And so we came up with some of the benefits, at least the ones that we can present during today's session. So for the Agilists, it would be reduced reporting and reconciliation requirements, because this is also something that every time the management wants reporting, okay, what you have done, right? And the Agilists have to go and explain why, if you are, more engaged, you will know what's the progress, and so on and so forth. Then we need more increased budget flexibility, right? So that it's not annual budget cycles, but let's say iterative or whatsoever. But in order to have this, we also need the support from the financial accounting team, since they may come and say, okay, this is your fixed budget, and why you are changing the plan constantly, right? And the third benefit would be increased understanding of the impact of future decisions, to go with this strategy or initiative or that one. Or if we, I don't know, increase the risk defect rate, what would happen to the budget, or if we want to hire more people, what would happen to the budget, etc., so that we make better decisions also as agile teams, and do not just stick with this that, okay, the world is dynamic, we have to change, but we also have to consider the risks and have a better financial planning. And the benefits for the accountants is the reduced month-end close cycle time, since they are also spending a lot of time creating their reports, and they do not have much time for engaging with the agile teams. So we have to, as agilists, we have to help them to improve that part as well. Increase the added value to the business, since if they collaborate with the agile teams, they can bring more insights and data and financial forecasting to the agile teams, and thus, those teams together can create better outcomes and better future for the business itself. And the increased control and predictability through built-in governance and risk management. So as you can see, those benefits are essential, and this is why those teams need to collaborate. Alistair, you want to add something here?
Yeah, there are, of course, other benefits as well, but we feel that these are probably ones that help us to have the conversations. Now, some of the things that we're going to talk about, you as agilists, or we as agilists, we know this already. And so some of it will kind of go like, well, yeah, I know that. But what we're trying to do is we're trying to show this information in such a way as you can hopefully start or continue a conversation with your accountants, with your finance team, so that we can actually start that process. So understanding, for example, that you could reduce your month-end cycle could be something that will be of great interest to the accountants, and they need to be shown how that could be done. The idea that actually through agility we increase predictability and control rather than decrease it is something which is probably the opposite to what your average accountant is thinking right now. And this is, we're going to talk about the mindset next. And what we're trying to do here is help you understand that accountant's mindset, so that when you're having the conversations, you can understand where they're coming from, and hopefully then give you some ideas as to how to say something or do something or put something together that is enough to open the door so that the accountants become curious enough to actually adopt this. One thing that we need to understand about us crazy accountants is, if we do the thing as we have been shown how to do it, and as we've been taught how to do it, as we've been trained for many years how to do it, we can't be fired and we can't be put in jail, because we know that if we follow the rules, if we create a budget, get everybody to sign off on it, and then hold the company to that budget, for example, we know that we've done our job. Right. So from that, and that's sort of part of the mindset that we need to understand. And I sort of say this to sort of friends, family, and colleagues, is that if there's going to be a debate between the accountants and the agilists, the chances are the accountants are going to win, because at the end of the day, if you can't explain why something has happened in financial terms, basically the structure that we have at the moment, if you work for certain organizations, obviously this is not true because they're enlightened, but for most organizations that haven't started this journey yet in the finance department, they're probably just going to say, no, you can't have any more money, or you can't do this, or you have to explain this, or you can't go any further, or whatever, and they all have that final say. And what we're trying to do is to bring the teams together so that the accountants realize, hopefully, one thing, which is, by doing things as they have been taught to do, actually, they're probably missing massive opportunities. In fact, I'm fairly convinced that we would be missing massive opportunities, because as agilists, we know that we can spot things and we are trying to iterate and change to increase value. But if we then have to come back and say, yes, but by the 15th of September, we said that we were going to have delivered the following 4 things, and we haven't done that yet. we then miss opportunities, although the accountants are technically correct. Does that make sense, guys? As to a little bit of an insight as to where an accountant might be coming from. Does that help? I understand. So let's look at the
let's go into the mindset, and maybe we can also get kind of some insights also again from the audience. So again, 2 questions. What is the Agilist's mindset in the context of budgets and planning? I suppose that most of you would be feeling this, first part, but maybe if you can also cover the second one, what is the accountant's mindset in the context of budget and planning? You can feel it too, but at least let's just, try to get the first question, okay? Yeah, if you are following me, then this is the section number 3 in the outline. Okay, again, maybe a couple of minutes. So what do we understand, or how do we look at the budget and planning as Agilists? And again, if you have some experience in the financial field, if you know the accountant's mindset, you can maybe also share some ideas from their mindset in the context of budget and planning.
And if you have any thoughts on what the accountant's mindset might be, your perspective on what it might be in the context of agility, that would be quite interesting as well. No change, please. Yes, that's certainly starts it. CapEx versus OpEx, brilliant. We're going to cover that in a bit as well.
Oh, love this first one. I'm right now in this situation. The MVP. Yeah. Yes.
I did that last year.
Yes. Yesterday we were discussing like different scenarios with Alistair, and I was, telling the story of my current company. Yeah, working with startups is a completely, different story.
And again, as Agilists, we do understand that if we could, do something quickly to show the value that could be released, it should help unlock additional funding, right?
Exactly. Yeah.
It's a de-risk piece.
Okay. Thank you very much. Okay. So basically, I'm really keen on checking the second one. Yeah. Let's see. Okay. The mindset of the accountants. Can we please reduce costs? Yeah. Fully loaded costs. Yeah. Okay, maybe we can, we basically have a couple of ideas here. Let me just remove this yellow stickies so that we'll look into some ideas that we wanted to share with you. Yeah, Alistair, you want to?
Yeah, so I think so from from the accountant's
yeah.
perspective, as I mentioned before, I can't be fired or put in jail if I prepare a robust budget and I agree with all stakeholders and hold the business to that budget. My next thought is why and how are teams so consistently off budget? I mean, again, with my accountant's hat, what's wrong with you people? It's like, why can't we just stick to the agreed plan? And then the other thing is that we do have a series of we account for things according to generally accepted accounting principles. They're called GAPs. These are in sort of mostly international now. although different countries had their own to start with, and there's still some little variances. But this is kind of a bit like accounting law. So when you see a set of accounts, a statutory set of accounts being prepared, or that has been prepared, you will see a notes to the accounts which will explain which of these generally accepted accounting principles have been followed in order to prepare a set of accounts. And you could choose different things, but you have to explain which one you have chosen so that you can decide, so that somebody reading the accounts can decide what it all means. So we'll talk a little bit on that in a while. And I think from the Agilist perspective, my sense as an Agilist is that I can deliver any outcome on time and on budget if I could be allowed to deal with the obstacles and the changes that come to me without being interrupted by constant requests for how are we doing against budget, have you delivered this, have you done that, whatever. And when I've worked with agile teams as an agilist, that's my biggest frustration, is trying to sort of keep the stakeholders and the numbers folk at arm's length so that the team can get on with the work of delivering and getting where we want to get to. And of course, we can always manage that. What I've done in the past is I've put myself in between the two, between the agile team and the rest of the organization, and I've taken it on myself to prepare reports in such a way that stakeholders understand it and read it, understand it, and sort of leave the teams alone whilst the teams deliver. And hey presto, we deliver on time, on budget, or better than that, and we get what we want. But another question that we therefore have, that people have asked me, is why is it that accountants are always trying to reconcile to something which is out of date? Because we know that very quickly, from day one of a new budget a period, the budget is out of date because things change, and we need to help accountants understand that.
Yeah, exactly. We are constantly struggling with defining the scope, right, for the accountants. Okay, let's move further.
Well, shall we scare people and look at a spreadsheet?
Yeah, let's just do that first. Yeah, maybe we play around with some numbers there. Yeah. Let me just stop sharing. Maybe you can share. Yeah. We are going to be back to the mural, but we just have a spreadsheet just to play with some numbers. Again, going back to the example with the startup that I was talking about. And so we tried to recreate a scenario. Let's say we have, 24 features. Right, and we need to deliver, and let's say, okay, in development there, we perfectly know that there is no code without a bug. And so let's say, Alistair, let's say that our bug defect rate is 10%, right? So this is the original situation. So let's see how the budget would be then distributed in two years.
Yeah, so we're going to create a two-year budget here.
Let's do this with 2 years. Yeah.
With 2-year budget. So what we're saying here is, you can see the numbers, the totals in column B. What we're saying is that we basically we're expecting to spend 24 million. This is on the folks in the team, so this isn't including other obvious costs like equipment and so on and so forth. But let's just say that we've got 10 teams, 10 people per team, so 100 teams. So everyone is earning from this on a monthly basis 10,000. Let's just make my numbers nice and simple to play with. So this is the budget that I've been asked to prepare as an accountant, and this is what I'm expecting then for us to be tracking against. Okay, so this is the original budget, and original. Always when people are watching, you can never type. So that's our original budget, and so far so good. All is good and dandy. So let's throw open some ideas. What happens? What goes wrong? So we're 3 months in. Everything has been going tickety-boo. What's happened now?
Okay, let's say that at some point, like the development team understood that actually the defect rate is not, let's say 10%, but it's 15%. Okay, we need to do a lot of refactoring. We have more technical debt, and we understood that it's actually not 10.
Okay, so
what happens then?
So what happens then? So in this example, then what we're saying is that actually it's 5% more than we expected. Now, just as an aside, if I may, as an accountant here, we're starting with this concept of a 10% of bug rate. Now, I totally understand that is the case. Working with all the teams I've ever worked with, that's just normal business. But if you're introducing Agile to an accountant who is not aware of these things, the accountant may turn around and say, well, if you're allowed a 10% error rate, what would happen if the accountants were allowed a 10% error rate? And what would happen if you've got 100 people in this organization here, and you had a 10% error rate? What that means is that every month of the year, you would have roughly 10 people who would not be paid their paycheck that month, right? That will be 10%. And so you can statistically predict that if we're allowed a 10% error rate, in a 2-year project like this, you would miss 2 months of paycheck for, as we're going through. Now, we can't turn around and say that it's just normal, 10% is just normal, because for an accountant, that's not normal, because that's completely unacceptable. I mean, I don't suspect that you could go to your mortgage lender and say, oh yeah, look, we're working on this Agile project, we've got these 10% error rates, so it might be that a couple of months I don't get paid. How would we all, how would we all
ouch
out, right? So again, understanding the finance mindset is things like accuracy need to be, with the numbers, need to be 100% accurate, because otherwise things go wrong. Now, let's say, so anyway, that aside, just for context, what we need to understand is we need to make this real. So we said 24 million. Now we're saying that we need an extra 50,000. So 5% of a million is 50,000. Let me get my numbers here. Was it? Oh, no, it was.
Okay.
I think that was the right number. So let me just add those in now. So what we're saying is that, 5%. Sorry, guys, be right with you. Right. So that 5% error rate that we talked about means that we may need, for example, 5 more people to come on board. Which means we need to spend an extra 50,000 per month, which over the life of the project makes the project go over budget by 1,050,000, right? So that's what would happen, and that's without taking into account the fact that we've probably got to do some catching up on the 3 months that we had before. So now, as the accountant is looking at that and going like, hang on a second, we're only 3 months into this thing, and already we're 1 million over budget. Which is what is going to happen. So how now, if we can sit down and talk about this, we can then talk about how we're going to claw that back, or what we're going to do to make this better. But if you're purely going to look at the numbers, what this means is that, well, I tell you what, why don't we just say that for August, we won't pay everybody for August, and that will get us back to our 24 million. So if everybody's okay with working for free in August, we can then get back to our budget and everything will be okay. So that could be a crazy option. Another crazy option could be, well, tell you what, we now can only deliver 23 features instead of 24, because we now can't do December 2025, because we just don't have the money. We will run out of budget. And these are the things that we need to be mindful of, because what feels like just 5% actually has a massive impact on the business, on the accounts, on the numbers.
But what if, let's say, like from the Agile perspective, okay, we are constantly prioritizing our backlog, right? And we know that whatever is on top has a higher priority, so backlog is adaptive. Let's say we look into these 24 features and we define that we can actually do 22. What would happen to the budgets in that case?
So if everything is equal, remove 2 features. If everything is equal, right, what we can say is, okay, we can move 2 features. On average, we're talking about delivering a feature per month. So we could get rid of 2 features here at the end of the project, deliver those early. And actually now we realize that although we've got this 5% increase, because we are constantly looking at things, we're now, the accountant's blood pressure is now coming back down again, because now actually it looks like we're under budget. Because if we're delivering those features at 1 a month, we now can see that we're actually under budget and actually everything is back to normal, which is why, again, the importance of having the conversations and discussing things. But we'll need to understand, hang on a second, those 24 features were going to deliver us an income of 50 million, for example. Are you telling me that those 22 features will still give me the same value? The answer, of course, as Agilists, we know the answer, of course, is yes, because we actually found better ways of doing things. But that doesn't necessarily fit with the accountant's mindset of, hang on, we said 24 equals 50. Now you're saying 22 equals 50. What's going on? Right. And this is why, again, if the accountant is sitting with you in the room, if they are part of your Agile team, rather than sitting in their own department altogether, they will actually be able to see, breathe, and experience all that's going on and be able to understand why it is that actually 22 features is enough. And we're actually back in a good place for the budgeting.
Okay, Alistair, do you want more cases so
if
that I add up?
If people have some.
Yeah. So what if, let's say, I don't know, at some point we understood that our technology is old or whatever, and we need a new language. We need to switch to a new language, or we have to kind of optimize and maybe even start from scratch. This is constantly happening, right?
Okay. So let's say that happens. So we've been going along quite nicely. Let's say we've gone 3 months into the project and things have changed. Yeah. And now we need to start again. Okay. So now, if that is the only information that I have, what I'm going to assume is that I now need from April another 24. I need another 24 months of work to be done in order for us to deliver those same 24 features that we originally had. And so now, quite pure maths, I've now wasted 3 months at $1 million each. So now my budget is looking like it's going to be 27 million for us to deliver that 24. So again, that then makes life difficult, because how do we go about answering the questions to make sure that we can, how do we get this back to 24? How do we still deliver now in less time? Because let's say that if the end of the project is still December and we can't move that, somehow there's basically more months here that need to be spent that we can't spend in order for us to deliver everything on time, because now we've only got 21 months to deliver 24 features, which we said originally was going to be delivered in 24. Can you see how the mindset is? Yeah. So why do we collaborate? Because we need to have the conversation with the accountants, which then says, well, okay, I understand that, but because this new language that we have actually means that we can probably work faster, and we could probably work maybe at a rate of 10% faster or whatever, and we can then bring back those costs, not have to spend the extra, and we can still stay on budget and deliver, even though it looks like we've wasted 3 months worth of work.
And again, sometimes even the suggestion, sometimes like the most intuitive one is, okay, we need to bring more people if we are behind, right?
Sure.
I don't know, let's bring more developers. So what's happening then?
Sure. So let's say we bring more developers, and let's say we need to bring another team on board. So a team is costing us about 100,000 per month. So we can say, okay, so we need another team to do that, to still deliver in time. So now our budget looks like it's going to cost us, this project is going to cost us 26 million by doing that, by adding that extra team in month 4 in this example, in order for us to deliver against that timeline, if that is the answer. And so if that happens, then we need to understand, is there extra value that we can get to counteract the extra 2 and a bit million, or do we need to figure out a way of making savings somewhere else that will bring us back down to the 24 number?
Yeah, exactly. Thank you. Yeah, if anyone
has any
has
questions on this, have they?
Any questions?
Donald, are there any questions around this? Because hopefully this is a sort of this is how the numbers guys are thinking. So this is why the numbers guys need help with understanding.
I'll throw a question out there, which is about the fact that we are making an assumption that we have a fixed price, fixed length, fixed scope, which fundamentally flies against Agile Manifesto. So if we start looking at it from an iron triangle perspective, the question which really goes back to is, where do you let it slide? Do you extend the time? Do you modify the quality? Do you actually think about putting some more budget in there? And I'm going to throw in the standard statement, please don't add more developers, because adding more developers, you just increases the time.
Exactly.
Absolutely right. Absolutely right.
Very good point.
No, that's an absolutely valid point, Rob. So I think one of the important things for the finance team to understand is, I personally think it's fair that the budget is the budget. If anybody was putting their own money into a project, and they had been asked for 24 million to deliver this thing that we have going, then they have scrapped around to pull together 24 million. So there's the money that is available. So then for the money to then expand, where is that money found? How do we go about finding more money to deal with what could be seen as a planning error?
Yeah, and that's understandable. I think for me, some of this would be the upfront. We want to think about setting up the flexible contract and building in that variance upfront.
So yes, we can do that. But again, somebody is putting the money in, and if we're saying it's a variable amount of money, at some point it needs, at some point when we are, if we're building our house, or we're making we're making changes to our house, we know that there's only so much money in the bank that can be spent on the extension or whatever it is we're doing. So we can't just say, oh yeah, by the way, it's going to cost us an extra 100,000. Yeah. So I think we need to learn to be more disciplined, if we can, on the fact that the budget is the budget. We agreed 24 million. What do we need to do to get back to the 24 million is the first thing. The second thing is the timing issue. With the iron triangle, if you allow for scope to move, if you keep time and cost fixed, and you allow scope to be the variable element of this, then you actually move into the area of possibilities and of opportunities. Because by saying that we've agreed we're not going to deliver 24 features, we're only going to deliver 20 features, because guess what? Maybe 4 of those features now are redundant anyway, but we actually are going to deliver 20 features, and the 20 features that we originally agreed are not the ones that we are going to deliver, but we're going to deliver these different ones because the market has moved and we can still do this thing and get more because we now know more about the market and we can understand what it is that our customers want. And so that's what we're going to build. And I think that the reason the conversation we're having tonight is important is because the team that is delivering the thing, building and delivering the thing, they have the brains, they have the capacity, they have an ability to solve problems and to innovate, and they need to be allowed to figure that out. But I think it's also fair that the person who is putting the money in and the people who are waiting for the thing to be delivered, that they kind of know that the money and the cost is that the cost and the time is fixed as much as it can be, but we then move on the features and on the scope side of things. And we change the word features and scope for value, of course, when we are looking at the agile triangle as opposed to the iron triangle. Does that answer it a little bit, Rob, and others?
Absolutely. It's I threw it out there more as a discussion point. I think I didn't want to really muddy the waters by talking about the iron pyramid or the iron tetrahedron and throwing quality in as the fourth variable.
Yep.
But I think this is the key. It's scope, which is either the feature set or the quality, which means there may be some unresolved bugs that there is additional work in the future. I think those probably are assuming you have everything else fixed.
And what we're going to do when we come to point 6, budget considerations, I think these are things that we need to help educate our finance colleagues with, so that they understand exactly what you're talking about there. Because I also think that quality should not be the thing that is diminished. Quality should be left. You agree which features you're not going to do, in my opinion. You don't degrade quality. Debbie's got a hand raised.
Yeah, I was going to say, Debbie, do you want to go ahead?
It also depends what it is you're trying to achieve. If your project is trying to achieve, for example, compliance with a new legislation, already have trimmed the scope to the minimum. So it might be that in that circumstance, which would be exceptional, and probably the time is fixed and the scope is fixed, and it might actually be that the budget has to increase.
Agreed, Debbie.
Yeah.
And having worked on a project for central government where that is exactly what we were doing, we knew that the time was fixed because the thing was going to receive royal assent at the time that it was going to receive it. And we knew that we had to deliver the things that we had to deliver in order to comply with the new legislation. And therefore, it was that we knew that, again, working with government is a bit easier on this point. We knew that we could then say, right, we actually need more to make this work. As it turned out, though, Debbie, in this particular example that I'm referring to, what we found was, although we had a number of items that we felt we needed to deliver, when push came to shove, we realized that we could save about 6 months on the project by not delivering one of the features. And what we worked out is that actually we could do some things manually, easily, which didn't need a huge development team to work on and try and figure out how to do something electronically that wasn't needed. And so again, this is the importance of having the conversations, working out first, are we going to run out of money and time if we carry on down this route? And then instead of trying to sort of force things, just say, let's have these conversations. Let's look at what we could do if we could still deliver this. And get the things. And this is what I'm asking us to do, is to allow everybody to use their creativity, their ingenuity, their innovation, their problem solving, and their collaboration skills to find solutions that are not about more time, more money.
Yeah. And another note, David just brought an excellent example. Again, getting back to maybe the startups, for example, whenever they are creating an MVP, there might be a benchmark for that specific industry, for that specific platform application. So features that you need to have to be able to enter the market. So in some case, there is a scope that is fixed, right? Because people are expecting from a similar application or platform to have these features, meaning you cannot just go, launch the product without those things. And so this kind of scenarios are also helping people and teams to, to be focused on the outcome, to create goals, and, to, instead of just thinking about the scope, but the goal, like what is it, the overall thing that we want to achieve by this time, or, with this like benchmark. So there might be also this kind of situations where, again, you have to collaborate and understand what is it that you really need to deliver. Okay, Alistair, maybe we should go back to the mural so that we are not out of time. So yeah, remember we were talking about the budget flexibility and the benefit for the Agilists even in the beginning. But again, in order to have it, Alistair presented it perfectly. Like, in order to have this, we have to help the accountants first to understand also our mindset by understanding theirs, but also to, to help them become more aware of how do we work. So again, another 2 questions for you. So is planning actually important? This is a very interesting topic and question that many teams and Agilists have been, focusing on recently. And how much planning should be done? How detailed should it be? Yeah. Another 2 minutes. Let's just cover these questions. Mm-hmm. Yes. Mm-hmm. Yeah, it seems like everyone is aligned here.
Absolutely.
Yeah.
And again, and this is something that, again, as Anna said, we need to help finance to understand that they don't need to have all. In fact, there is no point in having all of the detail and having the plan in great detail before we start, because things are going to change. And if we can then show that by being a bit more flexible around our planning and therefore around our budgeting as well, we can then actually make better decisions and faster decisions and more accurate decisions as well as we go. So all these points that have been made in here are absolutely correct and absolutely right. But it's about educating each other about what from the mindset perspective, what is going on. So somebody who is very detail oriented, and again, and this comes down to personality types, I think, as well. Somebody who is very detail oriented and who needs to sort of know what is going to happen will want to know what's going to, in our little example that we had, we're starting in January 24. Well, they want to know that by January 25, what materials are we going to need to bring in order to build the thing that we're building? And some personality types need that sort of sense of certainty. But we Agilists, we know that sort of spending time on that can be quite wasteful, because we don't know what's going to happen but over the next 12 months. So as you all said here, absolutely, we need to have enough to get started, knowing that we're going to constantly change. And what I try and explain to people is that whereas there's a myth that says that with Agile we do less planning, that's not true. I think with Agile we do more planning. Because we're planning consistently and continuously throughout the life of the project, and that's what we need to do. And I always use these quotes here because people always come back to, well, if we fail to plan, we plan to fail, and that to an extent is true. Benjamin Franklin is accredited with saying that. But that doesn't mean that we have to plan every single last nut and bolt before we sign off the green light to get the project going, because we also know that no plan survives contact with the enemy.
Yeah.
So how do we square that circle? Well, we square the circle by understanding that, as Eisenhower said, in preparing for battle, I've always found that plans are useless, but planning is indispensable. And I think that's the conversation that I have with my fellow accountants, to say, yes, we will do planning, but we're going to do enough so that we can get started, to know that it's worth getting started. And then we're going to continuously be replanning as we go through this, so that when the team is reprioritizing the product backlog and they're doing all those things, if the finance folk are right there in the mix, they will be able to work out the financial impact of these new decisions that are being made. Because we all know that this is how things work, and we always end up in the dark blue at the top, right? That's where we always end up. If we're allowed to do things the way we know how to do them. But if we're constantly trying to come back to that center line, that original plan, we're spending all of our intellectual energy trying to solve why we're off track, rather than trying to solve for the outcome that we are working towards.
Yeah. And one small note again, most of us might know this, but this is how we really need to talk to financial accounting people, to explain them, because again, they need to understand why the changing things is important. Otherwise, they will keep coming back with this question, why you have changed the scope, right? Maybe we should, since we don't have much time left, maybe we should move further.
I think this one is important and helpful.
Yeah.
Is the things that, so when I learnt these things, when I first started looking at business agility, I've always fascinated by the numbers, and I always like to back up a story with numbers. And when I understood that 80% of the value comes from 20% of the features, or 20% of the work, or 20% of the cost, understanding that actually helped me to communicate with stakeholders and the financial folk, because we can then talk about delivering that 20% first. So deliver 80% of the value as fast as possible, because then that takes the pressure off the rest of the plan. Most plans that I used to work with was always about delivering a big bang at the end of the project. And understanding this, that helped me do things in a different way. Connected with that is this idea of the half-life of a feature, the fact that something that we think is super important today may not be super important in 3 or 6 months' time, because maybe if we haven't built that feature by then, the opportunity will have passed. And so we need to understand that there is always going to be features and things on the product backlog that we will not deliver. Principle 10 of the Agile Manifesto, work not done. And accountants need to understand that there is a lot of work that will not get done that is in the original list that we don't need to do. And because of that, most projects can be stopped or pivoted early as soon as we've delivered enough value. I'm going back over the projects that I've been involved in personally, and I can't think of one where we did not deliver on time. And in fact, we've delivered early and under budget because of this thinking that we had. And just jump back to the previous slide for a second. And one of the main reasons for this is these studies that show that inspired colleagues produce 2 times the output or the outcomes than those of us who just turn up for a paycheck. Because by working with teams who are inspired and actually delivering great quality stuff, you don't want to factor that into your numbers as an accountant, but in the back of your mind that this is not going to be like the last project that we did. This is going to be something new and different because of how we're going to treat each other and how we're going to work together.
Alistair, I really suggest us maybe just to...
Let's do that.
Yeah, this one, because again, detailed reporting, again, all of us have experienced this. You have to prepare the report just to show to the management, stakeholders, and finance, accounting, like what you have done and why you have spent this amount of money and what you have done with the scope and etc. So I think this one would also be interesting too.
Yeah, and I think this is the interesting case. It's over 20% is the amount of time that ends up being spent or invested, if you want to call it that, in producing reports and reconciling items and doing all of that. And as I'm saying there, it has very little impact on decision making. And if I'm talking to my fellow accountants and they probably look at me a bit sort of strangely, I will say, well, look over the last 12 months. Look at the numbers that you've been reconciling and tell me how much the numbers changed from when you first pulled them out of the system to when you actually delivered them to the executive board or whatever it was. Show me how much, can you work out how much that change was? And most of them come back and say, well, they hardly changed at all. All we spent our time doing was making the slides look pretty. And that was certainly my experience when I was working as an accountant. So why do we need all this? Why do we have all this reporting and reconciling going on? And I think it has to do with the issue of trust, basically. If we as the accountants can't see what's going on, we don't know whether the humans who are in the room building the thing, are they working flat out, full of ideas, making things happen, or are they just sitting back and just trying to avoid work until a manager comes in and checks them? And it all has to do with how we think about our fellow humans. Do we have the Taylorist industrial age workers approach of people are lazy, they dislike work, they avoid taking responsibility and so forth? Or do we actually believe that people, if they have a purpose and they want to do what they want to work, they want to do well, they want to deliver something that they can be proud of, they want to do all those things? Now, the only way we're going to actually solve that, I think, this is something I've been discussing with Anna and with others, is if we could actually get the accountants to be sitting in the room, to be part of the Agile team, that would then be the answer that we want. What we won't have time to do is show you how we create time and save time for the accountant.
Yeah.
We won't have time to do that.
Let's maybe very quickly just show this example, since this one,
yeah.
It was really, at least it was very interesting to me. Yeah. Since we really know that, as you can see, maybe I'm sure that you can see this one.
Yep.
Okay. So this is how the month-end reporting for the accountants usually look like, right? With the annual budgeting, this is where the added value is. But the rest is like planning, reporting, planning, reporting.
And if we can help the accountants understand an agile approach to closing the books and doing and all those things, what we can then do is we can increase the value. As you can see here, we can increase the value, the added value time that they have to 55% or higher by being able, and then they can sit with the teams. They can help answer those questions that we have. They can help us with our decision making around what is the best approach going forward with this thing and going forward with this project. The budgeting then is more like touch. It needs to be a slightly more regular, but it's more like touch. And of course, the month-end reporting as well. For this to happen, a little bit of a culture change needs to happen with the teams. But again, we can really that's only supposed to be it's only 20 days. That's only the normal month, right? The number of holidays that they get. That's only 20 days a year, which I think is standard. But what we're doing is we need to help them to understand why it is that they don't need to spend an entire 2 weeks closing the books every single month in order to get value, in order to basically tell us what happened last month. In fact, probably what happened the months before, because by the time you've actually got the numbers and reporting, it's all out of date.
So if we are repeating here, kind of summarizing, if we are helping the accountants to create this free space, like the added value space, then they would be sitting with the agile teams and helping us with our decision making and financial forecasting more. And this is how we are going to solve the problem on both sides, right?
Perfect.
Maybe, Alistair, we can go back again to your spreadsheet and maybe also to do very short intro on how do we compare. For example, we have 2 strategies or 2 initiatives, whatever it is, and what's going on, let's say, in our profit and loss sheet, balance sheet, and how do we deal with that?
Time check. Where are we? How are we doing on time, Sath and
Do we have some time?
No, you've got 10. You got about 10 minutes.
10 minutes?
50 at a stretch, yeah. Yeah, for some questions. Yeah.
So the question, and one of the questions that came up at the beginning was capex and opex. How do we look at all of that, and how do we deal with these things? So we've got here 2 strategies. In the first year, we've got some revenue, we've got some cost of sales, we've got net sales, etc., administrative overheads. So that's the profit and loss account, and that's kind of what a very simple profit and loss account might look like. And then we've got a balance sheet, and in this case we've got a balance sheet which either has 50 million of assets or 90 million of assets, cash of 30 million or 10 million, creditors of 10 million or 30 million, but you can see that the net is 80. And I won't, we can sit down and do this in slower time at a different stage. But what we're going to assume here is that strategy A is for us to pay off our creditors and reduce the burden on the balance sheet. Whereas strategy B is to invest, in this example, about 30 or 40 million in building a new capability that we want to have. Okay, so let's look then at what that would look like in real terms. So strategy A, if we did that over the next 5 years, the organization would look fairly simple. We'd make 20 million of profit, and all of that would be absolutely dandy. What happens to that 40 million that we've spent? If it was capitalized, if it was OPEXed, if we were to have to expend all that in that first year, we would be looking at a loss of 36 million and a gross profit margin of negative 212%. So that's quite that would be quite damaging to the company if we did something like that. Even though we're going to earn some interesting money going forward, we're going to assume that we're actually going to make all this extra money here. And then the assumption would be that we would have the same cost of sales for the following years. And we can see that overall, we're making 36 million as opposed to 20 million. But this 36 million negative here is certainly if this is a public listed company, is going to scare shareholders and is going to cause problems with financing and debt and so forth. Okay. So
what can we do in this
what we
case?
actually do? So what we actually do in real time, in real terms, is we take that 40 million and we spread it over the life of the asset, over the value that it's going to create. So instead of spending the 40 million here in this year and making our profit look terrible, what we do is we spread it over so that our profit margins actually look fairly standard. We get to the end same numbers, as you can see, still 36 million profit overall, which is better than the 20 million because we didn't invest. But what we can see now is that our profile looks a lot simpler. And just to show that by breaking the numbers out, so the cost of sales is still 13 there. But what I've done is I've taken that and I've depreciated the asset over 4 years to give us that nice, tidy looking flow. Yeah. So that's what we would do, and that's how we would do it in real terms. So long as the money that we've spent is we're allowed to capitalize it according to, remember those gaps that I mentioned, the generally accepted accounting principles, as long as the work that we do falls within those and I can legitimately capitalize it. I can't just decide for myself whether or not I'm going to do it. We need to do the work and it needs to follow the rules.
And even if we compare the strategy B with the strategy A, so just to see the percentage. So in strategy A, we have 23.5% like of gross margin for each year. And in strategy B, if we just go down, like with the depreciation.
Let me just get these numbers in here for you, just a second.
Yeah.
So in this example, we've made 25.5% profit, which is bigger than the 23.5 that we had.
Exactly.
But more importantly, we've actually made 16 million more overall, including the cost of this investment.
Yeah.
And that's assuming that we're just spreading it over 5 years. Typically, probably spending 40 million, we probably spend it over more than that, but it depends on what the thing is that we've created. Any questions on that?
And also the numbers that are decreasing creates more credibility rather than every year you have the same gross margin. So also from the investment point of view, that might be more thrilling and more trustworthy. Yeah, any questions about this one? Okay. In that case, maybe, yeah.
Nothing in the chat. No, you're okay. Sound good.
So maybe we can just wrap it up here. Before the questions, if you have questions, we are still going to dedicate some time. I just have a small request for all of you. If you liked what you heard today, please kindly provide us with your feedback. We have a kind of a pretty QR code here you can scan, and there are some questions that you can go and answer. And there is also the mural link in it, so you can get it. We would appreciate that, because that's really important. And we are investigating into this topic and would love to hear what would you like to know more about this topic, and whether you would like to also participate or in our events, and yeah, we would appreciate that. Thank you. Alistair, if you want to add something, like just
no, I think we've hopefully covered a lot. I can imagine there's some bamboozled faces around, but what we're again just reminding us what we're trying to do here is trying to say there is a way forward for us to have these conversations. There's not a silver bullet that will solve this, except to say that the silver bullet is us collaborating together.
Mm-hmm. And if you have any questions, let us know.
I've got one to kick us off. I'm sure there'll be others from the group. So I think we appreciate there's need for greater collaboration. And I think when you introduce the whole session, I think understanding each other's mindset is crucial, and I think most of us understand that and try really hard to create environments where that exists. How realistic is it, though, realistically, to find yourself with, somebody from the finance department sitting and working as part of the team and, regularly attending, stand-ups or various other, events and ceremonies? Have you seen that, or is that a bit of a utopian thing? Because it feels like it a little bit.
So I have seen where accountants have been involved with the team and the benefit that has had. And where I've seen that is where I've been working with the teams as an Agilist, yes, but with my finance brain. And many of the things that we solved were because I was able to run the numbers, provide them to the accountants, and say, "Hey guys, we're all good here, thanks. Don't fret, don't worry. Everything is going to work the way we want it to work." So I have seen accountants working there, and the massive benefit that there is in doing so. Am I aware of it happening regularly? Not at the moment, but I don't think it's a utopia, because I think that if we agree that value is where the numbers and the stories meet, and we understand that there is more that an organization can deliver in terms of value if we work together, it's not going to be a stretch to help the accountants to understand where they can save time and why their input in the decision making directly in the teams is so much more valuable. And what we do with teams when we are starting, I mean, for many of them, we're starting the process at the moment, because this is all fairly new stuff that we're doing here. And we're starting the process and we're saying, let's create an extra 2 days a month and let's see what we could do with that. So we help the team create that time. And then we take those guys and say, right, now, could you help the Agile teams with some of the things that they want to know? And then there's a bit of a domino effect that we are expecting to see happen as we go through this. So I don't think it's not a utopia. It probably is happening in places. I'd be surprised if it isn't. Because there are probably other accountants out there who are working in Agile teams. But what we're thinking is that we need more of a wholesale approach to this, in the same way as we're finding with HR, agility in HR, we're finding agility in marketing, and we're finding that the teams are now just working together more collaboratively. And it just makes sense that it would be that bring finance along on this journey for everyone's benefit. But finance need to, this is why I would say, show me the money. We can show finance the money, show them the value of doing this, and show them the impact.
Also, Seth, I do believe that it really does not matter what would be the format there. What I'm thinking is, again, as Alistair mentioned with HR and marketing, maybe they are not there for every daily meeting, or maybe we do not need them to be there. But we really need the finance guys when we are doing the planning, right? When we are understanding, like, what's our goal, what are the things that we want to for example, deliver for the sprint or for our goal or whatever it is. And this is when we also kind of do our sprint budgeting and things like that. So we need these guys to tell us like what to do and to show us the forecasting. Because if, let's say, we have failed a couple of sprints, then these are the people who are going to tell us, you know, this is how the numbers look like. If you continue this way, this is how you will end up. Like to give us also some financial forecasting. And whenever they come at the end and review the work together, then they will know why we have changed things and, you know, what's going on. And they can also revise their kind of financial forecasting.
No, I agree with that. And I've certainly been involved in initiatives where during the planning exercises, you know, your PMO colleagues and others who were more directly linked with the budgeting and forecasting and reporting into other forums would be there so they could get a view on, you know, what's coming up. Sheila's had her hand up patiently, so I want to give her the chance to ask her question because otherwise we'll run out of time. Sheila.
Well, it's kind of a multi-part anyway. I know that these were examples for purposes of, they were simplified examples as far as I'm concerned, and it was hard for me to look at them because they don't take some factors into consideration, like what you're looking at for an internal system that's only going to be used within a company is different than if it's customer facing or externally facing, but informational only, and a new product is a whole different set of variables that I didn't see accounted for anywhere in what you were saying. I also had a concern that in your oversimplification on the spreadsheet, you're introducing a new product or new tool or a new programming language, but not talking about the costs associated with that. Even if it's the same team, they'd have to do some kind of a ramp up unless they already have used the tool before, just not in this context. And a lot of times you go with a tool that's not new, specifically because the cost of the resources to support the tool is so much higher if it's something new and not that widely known. So it sort of seemed to me like it would help if you had at least mentioned something about those things that could influence it, even if you weren't going to change your spreadsheet accordingly.
Absolutely, Sheila. And I think that what you're mentioning there is exactly the reason why I think the Agile teams, the accountants, need to be talking on a almost daily basis, because obviously when I'm running some numbers up like this very quickly to sort of show an example, you know, we can't think through every single scenario. But if you were to then say to me, actually, we'd have a ramp up, what would that look like? Well, it wouldn't take me too many minutes to work out what that would look like in terms of our overall financial budget. And we can then make a decision whether we would go down the route of doing something completely different, or whether we'd stick with what we'd have. And we would be able to create, if I had going back to my old world of as an accountant, if I had the time to sit with you and play with those scenarios and I could quickly run up the numbers, we could then make that decision together and present that as to what is the best way forward. And it wouldn't take very long to do that. So you're absolutely right in what you're saying. It's necessarily simplistic just to get the point that we can have these conversations, not to say that those have not been thought through and that they don't need to be thought through.
I can think of other things like that I think it would be helpful if the next time you guys present, if you were to, whoever the audience is, to just make a few notes about other variables that could affect it. Another one I can think of is for some types of products that you're developing, you talk about the Agile team. It may not be, I mean, you're talking about a steady state team, but a lot of times that's not really what you have. If you have something large at an enterprise level, or with multiple teams involved, there may be a ramp up where they're moving from another project or program onto that one, and you have a ramp up and down of personnel. and you may have some that are only needed for a certain part of the time. So, I mean, I understand you can't show all those variables on the spreadsheet. So I'm thinking it might be more a matter of having some kind, because that was distracting me.
No,
I didn't
sure.
want to say
No,
anything in the midst of the.
But thanks for sharing this.
No,
Yeah,
absolutely. Sure. So we had two things. One was I'm all for preparing stuff in advance and then showing all the numbers. But when we tried that, it just looked way too confusing because everyone would just be faced with a whole bunch of numbers and then they're trying to read through what it all means.
Yeah.
So there's that. But that said, we could do it in such a way that we bring out some more of these examples that you're mentioning here. And I think that would be very helpful. I would really appreciate that. And something that Anna and I will start working on almost immediately, because I think it is obviously of interest and of value for us to do that. But the other thing is, in real life, the way I would work is I would be sitting with you. You would be saying, okay, fine, that's all very good and dandy, Alistair, but I need you to answer this question for me right now, because I can't get past anything until we've solved this. And we would have that chat. And I wouldn't allow for me to go. I wouldn't go off into a corner and try and do something on my own. I would actually be sitting with you whilst I'm preparing the things so that we can be interacting with it. And that's how I normally work with people and with teams when I'm throwing up spreadsheets.
Yeah,
But
the other
thanks.
thing, the other thing is when you're talking about something where it's a known quantity where you're replacing something that exists that's for internal use, there aren't that many variables. But if you're developing a new product and you're not really sure what that product's going to look like, you have to have a little more flexibility. And I think that's just another one of those factors that, you know, a variance of 5% might be reasonable, or even less, on something that's internal administrative changes. Where if you're developing a new product that's going to be available to the general public, there might need to be a much higher variable. Correct. or a more flexible end date or something like that.
Yeah. And that, if that is agreed up front, then we can actually be working with all of those things, because many of those projects where I've been working on things where we are not sure what's going to happen, what we have done is we've started with, we have an idea, can we have enough money for a prototype? Yes, you can. Okay, great. So we have enough money for a prototype. We build a prototype. Hang on a second. If we were to do this, this is the potential income that we could receive. Could we have money now to start developing it? And so we do what we should be doing anyway as Agilists, is we do things in small increments and we build it up as we're going along, rather than trying to do what traditional business does or traditional projects do, which is to say the prototype and everything is all built into this one long project, which is going to last us 2 to 5 years. And that's the way you deal with that, because then also you're starting to deliver value early, and so the company can see that you actually should be able to start earning an income back, which is then helping give courage to the finance team, courage to the investors, and courage to all the other people that we've got something worth pursuing. And that's the sort of conversation that we need to have, not just, you know, I need 400 million for this thing.
So I did want to, spot on. I think that's a good place to start bringing it. We're up on time, and I think it's a good few points that you made, Sheila. So I think, you know, Alistair, and I can take them away and think about maybe how they might want to bring it to life a little bit more. But I think it was for illustrative purposes, and everything you've just said, Alistair, I totally support that, because that's why I added some of the comments I did onto your mural, because as Agilists, that's how we do want to work. We do want to de-risk. We do want to do, you know, minimal viable products to build and encourage confidence. Donald put a comment in the chat as well around, you know, we understand it will typically work in incremental fashion, building things up iteratively. But everything you said at the start is really, for me, what the heart of this conversation is about, and it's about educating each other and helping those who manage the budgets and those who are sitting on the accountancy side to understand that this is the way we try to work. Here's why. And here's the benefit for you. And, you know, once there's a greater understanding, I think, you know, that helps both sides. So I think it's encouraging. There needs to be more of these conversations. And I just wanted to thank you both for the session. I think it was very enlightening.
Thank you, Seth.
I'm sure everybody got a lot of value from it. are you able to share an extract of the mural, or is it something we can share with our group?
Yeah.
You can
Basically, use the QR code and the link is there. Yeah.
Brilliant.
So you will get
Great.
it.
Super. Yeah, we'll share a recording for those who couldn't make it along in the end. So thank you again, both. It was wonderful. It was good to see you, and it's a hugely important topic. So hopefully it will generate ongoing conversations in organisations.
Thank you.
Thank you all for joining us as well. We are up on time. We're a little bit over time today. Just a quick shout out for those who haven't seen it. We've got a few other sessions in already coming up. So the remainder of the quarter's full. We've got a really useful motivational session to close out the quarter around motivational maps with James Sales. So take a look at that if it's of interest to you. I've also got a few other ones that are just about ready to put live. So we'll get those shared soon. We're going to be welcoming back Marcus Dimbleby, who you might remember, spoken here before as part of the Red Team Thinking, Bryce Hoffman. So he's returning in April to do a session with his new partner on his new book and his work around doing big things fast. So that should be a great session. And then we've got a few others in the pipeline. So look out for those because those will imminently go live. And we hope we'll see you again soon. So thanks for joining. Thanks to our wonderful speakers. And we'll get everything shared as soon as we can. So, yep, thanks again. Stay safe. And good morning, good afternoon, good evening, wherever you are. Thanks again, folks.
Thank you, guys. Appreciate it.
Thank you.
Well done.